And of course, it's not just the Starboard anniversary, but we also had the Hang Seng Tech Index being announced. So with all of this focus on these giant tech stocks in China, how fierce is the competition among them as well?
Fundamentally, the competition is always there, and it hasn't really become any easier. But the entire market is growing and is still growing strongly and sustainably. So as you can see, the investors are not really too concerned about competition by and large, and share prices are going higher.
So, David, we have seen really the recovery in China being led by e-commerce. How do they compare to, say, pure online services?
Yeah, absolutely. So in Q1, when the COVID-19 situation was at the worst, the pure online services like gaming and payment, online video, short video, and so on were doing extremely well because everybody was locked down at home, where the infrastructure was severely impacted. But after COVID-19 started to, the effect of COVID-19 started to fade away, we see that the online services, including e-commerce and food delivery, are picking up strongly, especially e-commerce, because people are still afraid of shopping offline. So e-commerce overtook the pure online services to become the biggest growth driver, whereas the pure online services started to fade off a bit from the 1Q peak, and the time spent people have on pure online services started to come down a bit. Whereas the
David, has it seemed strange?
Services that are closely related to offline would be still very slow in recovery, like travel.
Sorry to cut you off, but David, does it seem strange to you that you look at the outperformance of Amazon in the US and then you look at Alibaba in this part of the world, in China, and it hasn't had that performance?
Yeah, so first of all, if you look at the e-commerce sector overall, then you would be not surprised to find that Pinduoduo and JD performance has been very strong. So the entire sector has done very well, even as compared to Amazon, they have done very, very well. The reason that Alibaba hasn't really performed much actually goes back to the first question that you have, which is competition, because Pinduoduo has grown much faster than Alibaba over the last few years, but now it's sizable enough. It's more than 10% of the total market. So the outperformance of Pinduoduo over Baba has become a real concern for Baba investors. And at the same time, JD performance has increased, has accelerated during COVID-19. So that has become another concern. So the gain of Pinduoduo and JD, I personally don't think it's necessarily a loss for Baba, but the market doesn't recognize that, and the market thinks the gain from the two would be a loss for Baba, which is causing the underperformance of the share price.
Right. How strong a positive catalyst could the Ant Financial IPO be? This, crown jewel, which could possibly end up being the biggest IPO in the world.
Yeah, it's a great question. We have got a lot of interest on Ant Financial so far, and in terms of valuation, Ant Financial is 33% owned by Alibaba. So if you do some of the parts, Ant Financial IPO looks like it's going to be more than $200 billion. We value it at $210 billion in market cap at the end of last year. So now it potentially could have gone up from there. But let's call it $210 billion, and one third of that is $70 billion. And most people don't have that valuation of Ant Financial in the Baba valuation. So if you add it up to the current Baba market cap, it's actually quite meaningful upside.